Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin Hughes Foundation. Everyday Economics is a production of America's Talking Network, and you can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, August 16th, and join me as always, Dr. Orphe Divounguy, PhD economist. Dr. O, it's been an eventful week in the world of economics, particularly here in the United States. There's three things I wanted to talk to you about today: consumer price index, retail sales, and housing starts. Where would you like to start? What do you think is the most relevant of those three data points that's come out?
Here's what we told our listeners, and I talked about it in the Center Square this week. It was, look, remember we had this big scare, the recession fears, stock market sell-off, yields, mortgage rates dropping like crazy in the first week of August. And basically the big question in the mind of everyone, especially investors, was, is the U.S. economy headed for a recession? And I wrote about this, and I said, look, we're going to look to retail sales data this week, and we're going to look to housing starts data this week, and we're going to look to the CPI numbers to get a hint as to whether or not the U.S. economy is, in fact, slowing too fast and headed for a recession. And what we learned this week is that inflation is continuing to move towards the Fed's target, right? Inflation is still moving in the right direction. But retail sales beat expectations, alleviating those growth fears. And then you look to the end of the week, right?
Walmart numbers. Well, I was just going to interrupt you and say, like, Walmart's numbers came in and they were absolutely bananas. I mean, I like getting texts from you, but you sent me an emphatic text saying, "Did you see Walmart's quarterly numbers?"
Yeah, well, Walmart is basically saying people are still spending, and right. But the big question is, like, who's still spending? Are people really like spending down though? Like, if you're going to, you look at Costco, same thing, right? If you're going to, in periods where things are a little tight, you might actually go to Walmart, right? And so maybe it's actually not a sign that people are still spending, but people are like kind of bargain hunting. And then you sent me a text about some other CEO that said, "Hey, America's turning into a country of bargain hunters," right?
It's a CEO of the Bank of America had said that, and I said, "Well, welcome to the program, sir. I think Americans have been bargain hunting, really for the last 4 years. I mean, trying to find bargains in this
the combination
in this
of
economy
higher inflation
has been really
longer.
challenging.
Yes. Higher inflation for longer, higher interest rates for longer. It has turned us into bargain hunters, which is why Walmart's doing well. But good news, inflation's coming down. Retail sales beat expectations. So the combination of like a consumer that's still in good shape, somewhat in good shape, right? And lower inflation, basically that's a tailwind, right? That just means the economy could continue to hum in the right direction. And so that was good. And then we got housing starts that basically showed the opposite. Housing starts fell, right? And when I look into the data, so first of all, historically, why does it matter? We know it matters because historically, housing starts have been kind of the leading indicator of changes in economic activity of the business cycles. And so a big decline in housing starts does not bode well for future economic growth. It kind of tells you that economic growth is slowing and could slow further in the months ahead. So anyway, so we get some good news, bad news situation. And it's kind of like what we've been getting, right? Like the soft landing scenario. No one knows how to deal with this. because it's like good news, bad news, good news.
Mm-hmm.
You're like, we're not, it's not a slowdown. It's not a big slowdown or a crash. And it's not a strong economy either, like an economy that's getting stronger and stronger. It's kind of a weird, like, we're slowing, but we're not slowing enough to send us into a recession. And that's kind of what's happening right now with the economic data. But yeah, anyway, that kind of sums it up. So we got inflation down to 2.9% year over year. Prices growing at 2.9%, higher than a year ago. Core CPI 3.2% higher than a year ago. The good news, like I said, a tailwind for consumers, because look, wage growth increased 3.6% year over year. So now you got wages rising faster than consumer prices. And so that's going to help household budgets. All right. So that's the good news of the week. And of course, if budgets improve because purchasing power has improved, then you're going to have a consumer that's supported, that can go out and spend at Walmart.
Mm-hmm. Yeah. I mean, is there anything else in the data that you find to be remarkable, specifically around CPI? I mean, I'm just looking at this at the fever chart, from the last, I guess it goes back to 2019. I'm looking at the story that was published at Axios. And I mean, you can see CPI kind of hanging out, 2019, 2020 before the pandemic, in the ballpark of 2%. And then it just rockets up in 2021. I mean, like this chart it's kind of staggering.
Fast.
It's a mountain. Yeah. It's a mountain. Right. And you can see CPI hitting, it looks like it was maybe, I think, July of 2022.
We hit 9%.
Or June of
over 9%.
We hit 9%. I mean, and that was not a frog boiling. I mean, that was a scalding. I mean, it just you'd go to the grocery store. Well, we lived through it. I mean, we all lived through it. And what we lived through it.
That's right.
What we've seen is
but it was more painful for some. It was more painful for some than others, and we could do a whole show on that. You and I talked about this a little bit yesterday.
And honestly, I think we should. I mean, and because it's like, for the average American, that period of time was incredibly confusing and incredibly frustrating. And so I think that having a conversation about what happened, why it happened, to whatever degree that we can make sense of it, I think would be ultimately pretty valuable. Any final thought on housing starts? I mean, this is the space where you spend the vast majority of your time.
The one thing that I thought was interesting was the kind of the rebound, last 2 months of small rebound in multifamily starts. I was pretty surprised. I mean, rent growth is slowed, but maybe it's, not that bad anymore. Rent growth seems to be stabilizing around 3.4, 3.5% year over year. Yeah. Lots of apartments coming on the market, right, being completed, and maybe we've hit the bottom in terms of multifamily starts, and that space could be kind of like stabilizing and rebounding. 2 months in a row, we see an increase in construction of buildings with 5 or more units, and so the big decline in housing starts this month was really due to single-family starts, with builders pulling back because housing sales have been kind of weaker than expected. And inventory has risen. And so, interesting. I thought that was interesting. I also have to end with the fact that, look, less restrictive monetary policy should revive construction spending. Okay? Like, the Fed is set to begin its cutting cycle in September, or at least we expect it. And so that's going to help builders. Mortgage rates dropped a lot in August, so that's probably also going to show up in the August numbers for builders. So far we're getting confidence, really low confidence among builders, but I think that might actually improve over the next few months, especially as we get into this housing sweet spot, I call it, where price growth is a moderate 2.8% year over year, so it's easing. Inventory's up, and mortgage rates at the same time came down. So you got a strong labor market. The labor market's not strong, but people have jobs. We have the highest employment rate for prime working age Americans in 20 years. So people have jobs. Mortgage rates dropped. Price growth has eased. Affordability has improved. And there's more inventory, 25% more homes on the market today than there were a year ago. It's kind of the housing sweet spot. Why not go out in the market right now and buy yourself a home? Especially if you've been waiting, this is probably the best it's gonna get. And you got to get in there right now and take advantage. Seize the moment where you're getting all the stars lining up, to make the right affordability improving. You have a job, right? And then you have more inventory, more options to choose from. So if you're a buyer right now, I'd say talk to a loan officer, get yourself pre-approved, and get out there. Start shopping ASAP before mortgage rates come back up.
All right. Appreciate your thoughts as always for Orphe Divounguy. This has been Chris Krug. Subscribe to Everyday Economics and other quality podcasts at americastalking.com.